Have you ever wondered why price seems to bounce off certain levels on the chart, almost as if there's an invisible barrier stopping it? What if I told you that understanding these key zones could be the difference between winning trades and constantly getting stopped out? In this video brought to you by CoinLenity, we are breaking down support and resistance levels, what they are, how to identify them, and most importantly, how to use them to improve your trading decisions. CoinLenity is a leading online edtech company dedicated to regionalizing financial education. Our mission is to make finance accessible and understandable for all, regardless of background or experience. Through comprehensive courses on Forex, stocks, investing, money management, and financial planning, we empower our clients with the knowledge and confidence to navigate the financial world with ease. In this video lesson, we are going to be talking about support and resistance levels. But before we dive into this topic, I will need you to take a little bit of your time to like, subscribe to this channel, and also hit the notification button so that you can get notified whenever we upload new educational contents. Do remember that you can earn reward prizes like cash rewards, trading bonuses, personalized trading plan, consultation with a mentor, and so on by engaging with our educational content. So the more you engage with our educational content, the more you can earn reward prizes. So to learn more about our reward program, you can click on the link below in the description area. So what are support and resistance levels? Now, support and resistance levels are essential tools in Forex trading, helping traders identify key areas where the market may reverse or pause. A support level is a price level where the currency pair tends to stop falling and bounce back upwards. It represents demand, as buyers often step in at these levels. On the other hand, a resistance level is a price level where the currency pair tends to stop rising and reverse downwards. It represents supply, and sellers often step in at these levels. So over here we have an illustration of the support and resistance levels. So as you can see, the zones marked out in green are the support levels, while the zones marked out in red are the resistance levels. So as you can see how these levels play a crucial part in the forex market. Now when price gets to the resistance level, it can't go beyond that resistance level. That is, it can go higher than the resistance level, and what it reverses and starts moving downwards. While moving downward, it gets to a support level, and as you can see clearly here, it has a hard time breaking through the support level. It can't break that support level, and what happens? Price reverses back upwards and gets to the next resistance level. Now when it gets to this resistance level, as you can see, it can't move away from this resistance level. It holds price and sends it, that is, this resistance level here holds price, keeps it from going upwards, and sends it back downwards. Price starts going down and gets to this other support level at the rear end here, where it can't move past. And what happens here? The price reverses and starts moving upwards to the next resistance level. Now in this video, we are going to be discussing about a particular level of support and resistance called the fair value gap. Now what is the fair value gap? If you look at this illustration, we are going to be using this illustration to define the fair value gap. Now looking at this illustration here, we have what we call efficient price action here. Now you can see over here in this efficient price action, we have three candles formation here. You can see we have 1, 2, and 3 candles. Now as you can see, there is no gap between the wicks of this candle. So as you can see here, the wick of this candle and the wick of this, that is the wick of the wick high of the first candle and the wick low of the third candle are overlapping with each other. So we do not have a fair value gap here. We will have what we call efficient price action here. And over to this section over here where we have inefficient price action. This is what gives birth to a fair value gap or an imbalance. Now we have the first, the second, and the third bullish candle. As you can see, the wick high of the first bullish candle and the wick low of the third bullish candle is not overlapping with each other. Now the gap between the wick high and the wick low of this candle is what we call a fair value gap or an imbalance. So this is a kind of support area that we use in the market. Now moving on to the bearish example, we also have the 3 candle formation. We have efficient price action here. Why do we have that? Because as you can see, the wick low of the first candle and the wick high of the third candle are overlapping with each other, so we do not have a fair value gap here. Now if you move over to this section over here where we have the fair value gap or imbalance present, you can see that the wick low of the first candle and the wick high of the third candle are not overlapping with each other. Now that gap in between the wick low of the first and the wick high of the third candle is what gives birth to what we refer to as an imbalance in the forex world. So guys, if you want to continue learning more trading concepts like this, you can take up our 5-day free training program. Now this 5-day free training program is a trading program that is totally free, and you can learn more trading concepts by enrolling for this program. So to enroll to this program, what you just need to do is to click on the link below in the description area. So moving on, let's look at a real example, that is a real chart example of a fair value gap. Now, as you can see here, we have a fair value gap on this chart right here. You can see the wick of this candle and the wick of this third candle. This is a bullish fair value gap, by the way. The wick of this candle and the wick of the third candle here, that is the wick of this candle, the wick high of this candle and the wick low of this candle are not overlapping with each other. So we have a fair value gap inside that range. Now, what do this fair value gap act as? We use them as areas of support and resistance. Now, in the bullish example, this is going to be acting as a support level over here. So as you can see, price comes back to that fair value gap, and what happens? It can't go past that fair value gap, that support area, and you can see price reverses and starts pushing upward. Now we have another example here of the bullish fair value gap. So as you can see, price returns back to this fair value gap. We have what classifies this as a fair value gap. First of all, you can see that we have the first, the second, and the third candle. Now the wick high of the first candle and the wick low of the third candle are not overlapping with each other. So we have a fair value gap here. And what happens? The fair value gap acts as a support area. Price comes back to the fair value gap, can't go below that fair value gap, and what starts going upwards. Over here, we have a bearish example of a fair value gap. Now you can see the trend is clearly bearish, and we have the first candle, the first, the second, and the third candle here. As you can see, the wick low of the first candle and the wick high of the third candle are not overlapping with each other. So we have a fair value gap. And what happens? Price comes back to that fair value gap and finds resistance, which keeps price from going higher and sends it back lower. And here we have another example of a fair value gap. That is a bearish example of a fair value gap. As you can see, we have the first, the second, and the third candle, and we have the wick low of the first candle and the wick high of the third candle not overlapping with each other. So what happens? We have price comes back to the fair value gap created by that range, and that fair value gap keeps price from moving upwards and sends it back lower. So guys, with that, we've come to the end of this lesson. Now, if you are looking for a space where you can connect with others, share ideas, ask questions, and learn together, then the CoinLearnity Telegram community is where you need to be. In the CoinLearnity Telegram community, users can engage with other members and share insights, ask questions, and get answers from peers or experts, and also stay updated on news, tips, and opportunities from CoinLearnity. So to join the Telegram community, you can click on the link below in the description area. And also, if you want to continue learning more concepts like this, you can take up our mentorship program available on our platforms. Now, this mentorship program is designed in such a way to guide you through the beginner to advanced concepts in trading. So if you're interested in taking up our mentorship program, you can click on the link in the description area below to enroll into the program. Now, before I go, I would like to remind you to like, subscribe to this channel, and also hit the notification button so that you can get notified whenever we upload new educational content. My name is Emmanuel for CoinLearnity, and I will see you in the next video.
Learn and earn with CoinLearnity. Ready to boost your knowledge and get rewarded? With CoinLearnity, every minute you spend learning turns into real rewards. Here's how it works. 1. Sign up or log in to your account. 2. Head over to the Rewards tab in your personal learning area. 3. Watch our free video tutorials and earn CoinLearnity tokens for every minute you spend learning. The more you watch, the more tokens you collect, and those tokens can be redeemed for amazing rewards like gift vouchers, trading bonuses, cash rewards, and more. Don't miss out. Start your learning journey with CoinLearnity today and make every lesson count.